With us now for more is Jingyi Pan, Associate Director at S&P Global Market Intelligence in Singapore. Good to see you again, Jingyi. Welcome back to the program.
Well, good morning, Katie. Well, very glad to speak with you again at very interesting times.
It is very interesting times. So how did the conditions look like last month? Could you give us some color, your earliest insights in the Purchasing Managers Index just after the elections?
Well, thank you, Katie. So as you have mentioned, we did see in April the number for the Philippines manufacturing PMI showing solid improvement. And definitely, as you pointed out, election impact was underway. But moving into May itself, however, we've seen the number really close to stagnation. And this itself actually capturing manufacturing production, heading back into contraction territory. New orders growth has actually slowed as well. And I think this itself is altogether telling us about the conditions on the trade side that's actually impacting production for Philippines. And even though Philippines may not actually be as exposed to some of the other ASEAN economy to the US trade per se, but just due to the effect on trading partners as well due to the tariffs, we're seeing some of the reports coming through from manufacturers stating that that is actually impacting conditions in the Philippines and more broadly as well. I think you mentioned in the region that's something that's not limited, of course, to the Philippines and to the other regions as well, including South Korea and Taiwan, where we've seen the numbers coming in really subdued this morning. And coming back to the Philippines, I think that impact definitely has also reached employment side. So you do see a shedding of staff in the manufacturing sector and at the fastest pace in a year. So it's really telling of the impact coming through so far.
It is
definitely
very telling, but if you make a comparison then, because we have a bit more data to analyze and just dive into, we are not so impacted as you say, but then there is stagnation. So what's causing that when you compare us with maybe more developed economies like Japan, Australia, which also came out with their own PMIs?
Yes, certainly. I would say that the situation for the Philippines is closer to stagnation, and that itself, with some of the front loading of the goods orders having already taken place in the month before. If we were to look at what's happening, say, for example, in Australia and also in Japan, where we have more data coming through, Japan definitely has been under lots of pressure, posting below the 50 point again, even though the subdued condition, the contraction actually moderated a little bit. In Australia, however, I would say that this situation is a little bit more like April for the Philippines, where you do have some of the impact coming through from the election, the federal election in Australia. So that condition itself is a little bit unusual from the typical situation. Broadly, I would say for the region, though, there is that US tariff impact coming through a little bit more strongly in the May month compared to what we have seen in the initial announcement in April that has invited people to actually front load the orders. One thing I do, however, want to really point out to everyone on the show is that we did see sentiment actually improve in the Philippines as well. Business confidence actually picked up in May as compared to April when we first heard the US tariff announcements. And to that extent, I think it's showing some of this conviction that whereas things will actually improve with some of the negotiations, even though our predictions at S&P Global Market Intelligence, however, is for the fact that these negotiations is still going to take some time, even though we've seen some of the early positive developments, such as between US and mainland China.
All right, so we're closer to stagnation. You mentioned a bit about employment there and also a pivot to a more confident sentiment. How are consumers holding up, given that inflation isn't really there? In fact, it is projected to slow even further. Might that be a certain sort of an incentive for the economy to hang on to?
Definitely. So at least in terms of our projections for inflation in the Philippines, we do see things being rather in target, around the 2 to 4% target for the central banks. And that is something that in our PMI surveys, even though we did see a slight tick up, a very slight tick up in terms of our inflation or price indicators, that's still very much pointing to the inflation staying subdued in the year. And that is expected to support consumption. to some extent if you do not see prices continue to tick up. Broadly as well, I think the expectation is for the central bank to actually further lower interest rates, the next one perhaps towards the second half of this year, and that is going to actually help to shore up some of these interests, at least in terms of consumer interest, client interest, to pick up at least on the manufacturing side. The survey doesn't capture services, but at least in our prediction as well, we do see the tourism sector, something that's going to actually help shore up growth into the second half of the year and to reach our 5.6% GDP target for 2025, Katie.
Well, interesting silver linings you see there despite the slowing in May. Thank you so much, Jingyi Pan of S&P Global Market Intelligence, live in Singapore.